Good afternoon, I'm Jeanne Yurman with TheStreet, and I'm standing here with Jason Weisberg. He is the Managing Director of Seaport Securities. Thanks for joining us.
Happy to be here.
All right, so the big headliner today, of course, is this jobs report. We saw stocks shoot up at the start, and yet that's kind of fizzled at this point. Can you tell us what your take is on this?
Well, my take is I think that most traders that are running desks probably came in this morning, waited for the number came out, covered some positions, flattened out for the weekend, and that was that. I mean, the number was encouraging as a data point, but I think people weren't expecting much, either to the down or the up, and business as usual, everyone's gone home.
So we're kind of done for the day. Okay, see ya. Well, okay, so, but we saw kind of dramatic moves. I suppose this is because of the thin trading today, right?
Right, well, what we see is in periods of really low volume, almost anemic volume, we see these moves exaggerated both to the up and the down. This morning we saw it to the up, and then normalcy kind of steps in, and the euphoria moves away from the data point. And with such low volume, we don't see a very, we're up 8 points now. That's probably the reality. That's where the sentiment is. It's fairly neutral. And I guess if we had seen a real anomaly this morning, we'd see a sustained move to the up or the down. In today's case, we'd see a sustained move to the up because the number was positive. But because of the low volume, we don't see a lot of interest in the overall equity market right now.
Well, and then also we have a lot of the geopolitical stuff going on, so it stands to reason that most people will probably go fairly flattish into the weekend, right?
I would agree. Historically, when you have such geopolitical turmoil or uncertainty as we see in Egypt right now. However, that being said, there's been a trend in the last few years, certainly last 2 years anyway, when you see these huge geopolitical events, the threat of a nuclear attack from a North Korean leader, the upheaval, with the revolutions that we saw in the Middle East versus having our own military conflicts in the Middle East, a lot of tough rhetoric talk between the Chinese and the Russians. The markets would react wildly and adversely to those type of events. But we've seen the market actually take those in stride and kind of almost shrug them off. Almost the same with the Boston bombing during the marathon. The market, reacted quickly. It was a knee-jerk reaction, and then kind of brushed it off. And we're seeing a lot more of that now. And I don't know if that's a product of the faster and immediacy of the news cycle, where people are readily accessible, have readily accessible news, or if it's just that it doesn't factor in now to a market that's so connected where the oceans don't seem to exist anymore.
All right, so looking ahead, earlier the two of us were talking about earnings kind of being on the radar. Is that going to be the focus, you think?
I think certainly for most equity investors, the earnings will continue to drive their decision process. And I think the trend, as we see it, with the exception of a couple, I think is there's an upward bias, and I think the market should continue to drift that way. And I mentioned drift because we have a lack of liquidity. The market will continue to drift up until people resume, the full court press, so to speak, during Q3 when everyone returns from summer break.
Well, and I have to ask you before I leave you about the expectations now of tapering after today's jobs report. What's your sense here on the floor?
My personal sense is that I would rather see the market continue to travel up without the aid or the assistance of the Fed. That being said, it was a necessary evil. However, I'd like to see personally the market stand on its own 2 feet. Also, I think that the investment community as a whole would like to see that as well. They'd like to have that much confidence in the U.S. economy. We're going that way. We're just not going at the pace that everyone would like it to.
All right, we'll leave it there. Jason, nice to talk with you. That is Jason Weisberg of Seaport Securities, and I am Jeanne Yurman for TheStreet.